Welcome, welcome. You listen to 360 Info. I'm your host, Antonio. What you do for yourself depends on what you think of yourself. And what you think of yourself depends on what you know of yourself. And what you know of yourself depends on what you've been told of yourself. Yeah, we skating by a little bit. We got a decent day. It's a little chilly out there, but we got a great show lined up for you. Kind of like a little break in action. We got some good financial local consultants. This is, beginning of the years, kind of, we think about taxes and finances and property taxes and things like that. So we wanted to bring you some good information about that, how you can save a little money, make a little money, defer a little money, and things of that nature. So we got a great show lined up for you on the financial services tip. Since it is Black History Month, we want to practice a little UJAMA of collective cooperative economics. So that's what we want to talk about today. Kind of break the sauce a little bit as far as the action is concerned. So we got a great show. We want you to get your something to write with, because I know you want to take some phone numbers and information down so you can get with our guests later. We got 4 exciting guests, some more small businesses. It's for you to work with and get some education and work through these whole financing approaches. And on our remote studio, I got my co-host, brother Vince Robinson. Vince, how you doing there?
Man, I'm just like you. I'm doing what I can to make it through this polar vortex. And I looked at the weather forecast, and it's going to be cold for another week or so. So, wow. Looking for a break, man. I mean, Ghana could never look better than it does right now.
Yeah, buddy. Yeah. We want to encourage people to keep boned up on their vitamin D. Keep taking your vitamin D, so we can try to stay healthy.
Absolutely.
But we want to break the action a little bit. Like I said again, we want to at least present you these 4 different entities and businesses of financial consultations, and to give you a good approach and give you thinking about some things about how to handle your money, what to do with it, how to navigate through this financial system, and dealing with taxes and dealing with that stimulus money and how to deal with it on your taxes. So first off, and I just want you to know too, I have dealt with all 4 of these these 4 entities right here, and I think they're good local businesses, and you can get some good information, and you can choose to deal with them or not. We're not saying that you have to, but we just want to give you some good information and give you a contact point where you can get with them later on. First off, we're gonna bring on Brother James Oliver of JC and Associates Tax Services, and he's going to give us some good information about the taxes, your financial or personal taxes, and what you can do with that stimulus check and how it relates to you going and preparing your taxes for the coming year. Brother James, how you doing?
I'm doing great. How about yourself?
All right, I'm doing all right. See, James is a guy that when you look at James, if you ever meet James, he looks like he's smart. I've been dealing with James for about 15 years or more, and the brother, we have good conversations, and he worked with several local businesses and entities around town. And James, I know a lot of people is concerned about, if they didn't get this stimulus check, how it's going to look on their 1040s and what to do and how to prepare themselves going into this tax season.
Okay, so here's the thing you have to remember. The stimulus checks, both the first one that came in the spring and summer of last year and the last one that hopefully people have gotten, was in advance on your 2020 tax return. And so if you got it, it does not affect your refund. This was just extra money the government was going to give you on top of whatever refund that you were going to receive in 2020. And so they advanced it to you in the springtime and summertime last year, and this last one in the wintertime. And so it does not affect your refund at all. Let me make sure that's really, really clear. Second thing, the first stimulus was based on your 2018. Well, first it was based on 2019's taxes. So if you put in your 2019 taxes, they based it on that. If you did not file your 2019 taxes, then they went back to your 2018 taxes. And so then it was based on that. But the last stimulus, that was the $600, that was only based on your 2019 taxes. So if you still hadn't filed 2019 and only had 2018 out there, then you got nothing at this point. So what needs to happen is that you file your 2019 taxes and your 2020 taxes, and you will get your stimulus money. And so, but a couple things, just so people will know. Since this stimulus was based on 2019, if you had a child in 2020, okay, then obviously when they based it on 2019's taxes, the child didn't show up on the taxes because they weren't born yet. And so you are now going to be entitled to another extra $1,100, $500 for the first time, $600 this time when you file your 2020 taxes. Now, the other thing that you have to remember is that there is an income level that you have to be, if you made under $75,000, then you'll get the full amount. If you made, and this is if you're single, if you made more than $100,000, then you won't get any of it. If your income was in between the two, then you'll get a part of it. The other thing is this: you have to remember, since this was in advance for your 2020's taxes, the government is supposedly, now I have not heard anybody receive this, but the government is supposed to give you a form, 1441, that says this is how much you received on your stimulus for the first time, and there's a 1440 B that says this is what you were supposed to receive on the second time. Now, like I said, I have not heard anybody actually getting those statements from the federal government, but you need to make sure if you got some money, because the government's not going to give it to you twice, that has to be put on your tax return what you received if you received it. But for some reason you didn't receive it and your income levels are proper, then you will receive it when you do your 2020 tax returns. Another little thing, when we have stimulus money and stuff like this, there are winners and there's some losers. The losers on this particular stimulus, the first and second one, is the child who is 17 and over, in college, being claimed on their parents' taxes, because both stimulus packages were for the adults and for any child under 17. So if your child was 17, 18, 19 in college and being claimed on your tax return, there was no money given to them on either situation. So the college kids were kind of left out on stimulus money. Now, part of the winners were divorced parents, in that if a parent was back and forth with a child or children, they claimed on one person's taxes one year, and next year the other one takes the child or the children. So if 2019, let's say that the divorced mom claimed the two children, okay, well, she got $1,000 for the first time and $1,200 the second time. And so now the ex-husband now claims them on the 2020 because this is his year. Well, guess what? He will also get that same extra $1,000, extra $1,200 for those two kids, and because he obviously didn't receive it on the 2019, but he's going to claim them in 2020. So basically the government pays twice for the same children. So for those parents who that flip-flop back in kids, they both will get the money, and the one who shouldn't have got it won't have to pay it back. So just keep that in mind. in terms of, so those are the winners, and unfortunately our college students are the losers. A couple of other things to think about with respect to, of course, last year was this unprecedented year with the COVID, and so the government tried to help people out in certain ways. For an example, if you are entitled to an earned income credit, what the government is going to do when you do your 2020 taxes, they're going to compare your 2020 earned income credit to your 2019 earned income credit. And let's say because you didn't work, you didn't make as much, then they will give you what you received in 2019. So let's say you only received for this year, 2020, $2,000 for earned income credit, but last year you received $3,500. Well, they will automatically give you the $3,500 for 2019, since 2019 was larger than 2020. So that's one of the benefits that you can have for filing your taxes. The other thing, just remember, the stimulus money, what they actually call economic impact payment, that's going to be on line 30 of your 1040. And so there should be something there, whether you received it, if you received the money, then you put something there, or if you didn't receive it, then you'll get a credit for that. There's a worksheet. But, if you don't know, I can help you out. A shameless plug, but if you need to know that. Another benefit that we have for this year, for 2020, because of the new tax laws, there is less people who are itemizing because the itemized deductions went up back from 2017 from, let's say, for a single person who was $6,300 to $12,000. And so a lot less people are itemizing. So a lot of times your charitable contributions are not deductible. Well, for 2020, if you've given $300 cash monies to a church, a nonprofit, then you'll be able to deduct that off your taxes whether you itemize or not. So that's another little benefit, kind of a one-year kind of deal that you will be able to receive. If you've given $300, that you'll be able to itemize that. No, not itemize that. You'll be able to deduct that from your adjusted gross income.
Okay. Sounds like you have quite a few options when it comes to understanding the taxes, and I think the best thing that you can do is consult a tax professional. We're talking to James Oliver about all things taxes. You're listening to 360 Info Network. I'm Vince Robinson with Hamtonio, and we will be right back right after these messages. We'll be right back. We're back on 360 Info Network. Vince Robinson, Hamtonio, and our guest James Oliver, who is the tax expert that's going to give you some very vital information momentarily. Welcome back to the show. James Oliver, take it away.
Well, real quickly, I know I have to wrap this up, but just a couple other small things is that teachers who buy protective equipment for themselves or for their students, they can write that off on their taxes. They're really the only profession who can be able to do that. So that's something that was new for this year. One other quick thing is that if, for an example, because you were laid off or because you were downsized and you had to take money out from your retirement account and IRA account because to live on, and you are not 59 and a half, you can avoid the 10% penalty because of the COVID, and there's a way to do that. The other thing is that you can, instead of being taxed all at one time, the government will allow you to be taxed over 3 years. So if you took out $15,000 to live on, then one, you can avoid the 10% penalty, so that's a $1,500 savings right there, and you can divide that tax to have it just $5,000 for the next 3 years, so you're not taxed all at $15,000 for this year. So that's another thing that you can do that will help you out if you were in that situation. So
all right.
I know my time is short, but those are the things that we could, just some quick things that people can take and hopefully digest. If they have any questions, they're more than welcome to call me, James W. Oliver with JC and Associates. I'm at 216-491-9350.
Give it to him again, James.
Okay, that's James W. Oliver Jr. with JC and Associates, Tax and Financial. I am at 216-491-9350.
Appreciate you, brother. And we just wanted to tease them a little bit, and so they can get a chance to call and sit down with you and make an appointment and get more information. I appreciate you, brother, for coming on, being part of that 360 Hookup Network segment. Thank you, sir.
One last thing, just so people know, I know a lot of people worked at home because of the coronavirus, and there is there's no deductions for employees who work at home. So that myth, you can't do it as of 2018. So all those who worked at home, there's no deduction for you guys.
Wow. Okay. All right, then. Thank you much, sir. Appreciate you.
All right, man. Take care.
Okay, then. All right, then.
Bye-bye.
Bye-bye. All right. Well, like I say again, if you want to sit down with James, get more information, I know it was quite a bit to digest, but give him a call, 491-9350. All right. Next up, I met this gentleman through one of my real estate agents, and, people have issues in dealing with property taxes. Your house could be paid off, and you have to deal with property taxes, but it may be an issue of you think you may be paying a little bit too much, or you might think you need a reduction in property taxes. So we're going to be talking to Brother Don Durrah, Durrah to Real Estate company, and he's an appraiser and he's a broker. So he's going to give us some tips on that and talk about the upcoming deadline if you think you want to challenge the county in reference to your property taxes. Okay, we're going to see if Brother Don, are you on?
Yes, I'm here.
How you doing then, sir?
Okay, how are you?
All righty. What tips can you give us and tell our listeners on what the deadline is coming up if they have some questions or want to dispute their property taxes?
Okay, first of all, the deadline is March 31st. You have to have your application in before March 31st of this year. And this only says that I wish to challenge how much I'm paying for my real estate taxes. You have that right. Everyone has that right. And that right is exercised by everyone in Cuyahoga County every year. But you can only do this once in a 3-year period.
Okay.
The important thing that I'd like to point out is many of us have the pride of ownership, and they like to hear that their house is worth thousands and millions of dollars. But the secret is, if you try to sell your house, you couldn't get the kind of money that you're paying taxes for. So why pay the taxes if the house is just not worth what you're paying for? And we can see that some of the reductions can bring $100 or $200 off of your monthly payments on your mortgage. So be realistic. Take a look at what your house is really worth and tell the county, I only want to pay what my house is really worth. And no more.
Now, is that real feasible? I mean, you can really go, like some people thinking that it's set by a certain type of rate, and so you can really go in there and challenge the county about, and what's that process may look like in challenging the process. How do you go about doing this?
In challenging the process, you should come in with an appraisal. An appraisal to prove, that's proof from an independent person that your property is worth what you're claiming. And the county, in most cases, will accept the appraisal from the independent appraiser and reduce your taxes. If you paid a certain amount for the property within the last year, that's also proof positive. So, we all like to think our house is worth, we're sitting on a house worth $200,000-$300,000, but maybe we're not. And this is just draining money out of your pockets when you don't have to. Now, when you file in March 31st, this goes all the way back to January 1st, 2020. So even though we're in 2021, they will go back and look at your taxes all the way back to January 1st, 2020, and you will get the reduction from that date forward.
Now, would they make that connection with your mortgage company, and would you see those reductions in the form of a lower payment, or would it go in escrow, or does mortgage companies work different on how they make that adjustment?
Well, once you get the reduction, you'll get a paper saying that we have reduced your taxes from this to that. You will take that paper you send a copy of that paper to your mortgage company, and you will get either a refund or you'll get the money applied toward future taxes. And or the mortgage company will reduce your monthly payment because now they don't have to collect as much.
Wow. That's and I've seen Brother Don work there. And since it is Black History Month, I would say, how many people of African American descent is working on this? Because when I went down there with you, it didn't seem like it was too many of our folks down there doing the work that you're doing.
Not many at all. Not many at all. But I have a lot of customers of the other persuasion. I do commercial as well as residential, and they're down there constantly, and they get reductions constantly. We're just not advantage of the rights we have, and we're paying more and supporting unproportionately. We're supporting the county and the school systems unproportionately.
So that pretty much seems like, again, with African Americans, a lack of information, causes you to pay more because of your ignorance to the fact. That sounds like what you're saying.
It's either your ignorance or sometimes it's just your pride. You sometimes I'm proud that my house is worth $200,000, and I'm letting everybody know, look at my house is worth $200,000. But now if you put your house on the market for sale and people came by to purchase it, you'll get a rude awakening. They're not offering you $200,000. They're offering you a lot less, or $100,000 or $50,000. They're offering you a lot less.
Mm-hmm.
Yes, typically, don't they base what they want to offer you for your home on the market value of similar properties in the same area? So as you're saying, you might, want to walk around with your chest puffed up because you're paying so much in property taxes and you feel that your property is worth so much, but actually it's only worth what someone would be willing to pay you for it. Exactly.
Now, in some cases, I've proven that the property was worth, let's say, $60,000, $70,000. I prove that. Now the people can still say, and I've had them turn around and still sell the property for $80,000 or $90,000, because they can hold out, and if a person wants your house bad enough, they'll pay more. But there's no need of you paying taxes on something that the other houses in this community are not selling for that kind of money.
Yes, I'd like to use a real life representation. I live in a subdivision in Cleveland, Glenville areas called North Park Place. All of us had our homes built at approximately the same time. It was a window sometime between 1991 and 1992. We were given a model to look at in terms of what the options were on the houses, and they were all priced similarly within a range of, let's say, $20,000 or $30,000. The value of our homes appreciated significantly, went up way up. They started somewhere around $79,000. That was the base. We got to a point where some of our homes were priced up around or valued up somewhere around $126,000, $130,000. When I looked at the values of the properties in my neighborhood, I saw a wide range of values. I have neighbors who were paying $1,000 or less property taxes, and then other neighbors were paying $3,000 a year for property taxes. It was all over the board, and I couldn't understand why there was so much, disparity between one and another. So I've been through a few different hearings down there at the Board of Revisions, and I've been able to get them to lower my property taxes. But I've seen how they have progressively crept up, even though the home values or the property values have not. We had the recession of 2008, and you saw, a lot of properties lose value. So it's not an intimidating process. You go in with your paperwork. I brought in estimates of things that needed to be done that had decreased the value of my property. I just had what I needed, and I presented them intelligently, and they reviewed what I presented them, and they reduced my taxes. But you have to do your homework. You have to be prepared when you have those hearings, but they're not really as intimidating as they seem that they could be. So, yes, it is a process. You wanted to add something? Go ahead, brother.
And we've always heard, and this is the squeaky wheel gets the oil. If you don't say anything, they'll continue to overcharge you for a lifetime. It's only the ones who speak out and speak up that will get the reduction. They're not going to automatically reduce your taxes.
Yes. And then you have...
Even though they know they're overcharging you, they're not going to automatically reduce them.
Right, because they're using those funds to do other things. So if you don't say anything, they will continue to exploit you if they can.
Well, the way the system goes is, let's say for numbers, we're going to get $1 million in taxes in a certain area. Okay, we're going to get that $1 million whether you like it or not. Now, if I reduce your taxes by $10,000 or $20,000, then they're just going to turn around and take that $20,000 and spread it over somebody else's taxes. Because they're going to get that money regardless.
Yes. Could you talk about the home exemption for people who are over a certain age, Don?
Yes, you can apply. Now the home exemption comes with income requirements. It was years ago it had no income requirements, so I don't care how much you made. If you're 65, you get a reduction. You get a home exemption. But now you can apply for that. This is in addition to reducing your taxes. In addition to, if you're 65, 62 or over or disabled, if you're a disabled veteran, and some of them don't know this, you don't have to pay any taxes at all. Zero.
Wait a minute. Hold up. Say that again, Don. Say it again.
Zero.
Homestead
if you're a
exemption.
Disabled veteran and you're in, you have a home, you can get a zero tax. See, if you don't know that, you just keep paying.
Right.
With Don, I know we have piqued some interest of some listeners out there. So, could you give them? I want to say this real quick, and just to let them know. Then we got to move on to our next segment. But I remember when I was down there talking to you. You brought up a point that, a lot of times when people get these older houses, they'd be afraid about having to replace a water line or things of that nature. But let them know real quickly, and then give your contact information on how they can apply for this extra coverage with the water department in case they have a water line breakage.
It's called Home Serve through Dominion. If you call in, you can get your furnace, your hot water tank, your water lines, your gas lines, your electrical lines in your house. You can get just about complete coverage through your water bill or your gas bill. And it may cost you maybe $20 if you get everything. It may cost you $20 to $25 a month. And it comes out of your light bill or your gas bill or your water bill. So you don't have to pay it. When you pay your water bill, you've paid for the coverage. And I've had it happen a couple of times. My sewer backed up. And they came out the next day and opened that sewer, no charge. I had to pay $25 service fee, and they came out and opened it up. And in some cases, if your hot water tank goes out and they cannot fix it, you get a new one. They put in a new one free.
That's really important information, especially when you talk about sewer backups, because most homeowner policies do not cover sewer backup of sewers and drains. I worked as an insurance professional for 27 years, so I know about this. You have to have an endorsement to your policy to provide that type of coverage. So when you opt into a program like that, essentially what you're doing is paying for insurance through your utility provider. But that's very important information, and there are a lot of people who could benefit from that. So we appreciate you bringing that into the conversation.
So, Don, give us your numbers and your contacts.
Yeah, if you need more information or you want to talk to me, it's no charge. My number is 216 231-2564.
One more time, Don.
That's 216-231-2564.
Okay. Well, good. I appreciate you, Don, and I appreciate your help you gave me too as well. You know, he's about his business, and we want to connect you guys. If you think you need his service, give Don a call, and he'll be glad and willing to sit down with you and help you out. So we appreciate you, Don, and thank you, sir. Any parting words before we let you go?
Nope. Just call me as soon as you pop before the 31st, because that's the last day they'll accept it. March 31st.
March 31st. Thank you there, brother. Appreciate you, sir.
Okay, thank you.
All right.
Okay, before we move to the next guest, I just want to underscore something. You know, the guest that we're having on today's show provides such a tremendous benefit and value to our listeners. And I think that these are the types of folks that we can have on our show that also should be sponsors of our show, because they serve a need in the community, and we have to find a way to connect them to our listening audience. So if you are interested in becoming a sponsor of 360 Info Network, our brother Stephen E. Boyd is available to have a conversation with you and to get the ball rolling on you becoming a sponsor. So all you have to do is reach out to him. Call him at 216-526-1297. That's 216-526-1297, Stephen E. Boyd. Lynn?
All righty. Okay. Our next guest works with Services by Signature Mortgage, and he's going to come on and educate us a little bit about it. If you're interested in possibly buying a house, single house, or investment property, and maybe what you need to do to prepare yourself for that, and what's going on in this market in this time frame of what we're dealing with. So I don't know if Brother Bond is on the line. Brother Charles Bond, are you with us?
I sure am, brother. How you doing?
All right, yeah, I call him 007, Brother Bond. Absolutely, and you know, he's always there to help you and give you information, and I treasure the brother, and you know, he just does a great service to our community as well. Brother Bond, what tips you got for us, our listeners out here, if they're in the market for purchasing or about to purchase a house or things like that? What are some of the evils or something or the ill preparedness that a lot of times we do in looking for a house?
Well, Brother Hampton, you have hit the spot with respect to people that are out here wanting to buy a home, the first home or second home. You have to have a plan, and that plan will yield you the best interest rates, that'll yield you lower monthly payments, and a number of other things that can be a benefit to you. And so in terms of having a plan, the plan doesn't start because now I got a lot of money. The plan doesn't start because my credit is great. You got to be there in a powerful position when you're buying a home, because in today's marketplace, people that have homes for sale that you're interested in, if you got to think about it, by tomorrow, that home may be gone. That's the nature of the marketplace now. Homes do not stay on the marketplace very long. Why? Because there is a shortage of inventory out there. So if you're in the marketplace to buy, you have to have a plan. And so what I like to do is take a person or individuals that want to buy a home and take them through that plan process so they can be ready when they find a home. Interest rates are very low nowadays, between 2 and 2.5%. That means your monthly payment, the principal and interest payment, is going to be extremely low. For instance, if you were buying a $100,000 home, your principal and interest payment would be about $381. I don't know nobody that pays that kind of rent, but that's what you can have out there in terms of principal and interest. Of course, you got to add to their taxes and insurance. But so if you're buying a $100,000 home, your overall monthly payment could be somewhere around $700. Not bad at all. Not bad at all. And so the plan would be, first and foremost, call a mortgage person like myself. and I'll give you the information that you need, such as what the interest rates are, such as what your credit score should be at a minimum to be able to be ready, how much money you should have in the bank. And let me say, if you're buying a $100,000 home, if you had at a minimum $3,500, you'd be positioned to buy a home. When do you have to have that? Not when you start, but maybe 10 days before you're closing on the loan. I got to see $3,500 or more in your bank. So even these numbers here can be adjusted depending on what it is you're trying to do in terms of buying a home. Second piece of buying a home is down payment. If you're dealing with a realtor who's the person that helps you buy a home, negotiating with your seller, the seller can potentially pay all, if not most, of your down payment. Down payment is our company fees, your title fees, and all the necessary other fees outside of down payment. So you can literally, if things are structured right, move into a $100,000 home and only have to have $3,500 out of pocket to be able to buy that particular home, as an example. And so income is also important. Just spoke to a lady at Cleveland Clinic the other day. She had said, well, Don, I just started with Cleveland Clinic about 3 months ago. I know I've got to wait 2 years. And I asked, where did you got that from? So, well, my family told me, blah, 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 blah. So I said, no, you got to be on the job working for 2 years, and if you decide you want to make more money and go to a Cleveland Clinic to make more money from where you came from, that's fine, as long as we see a 2-year history on your profile that you have been working. It could be part-time work, it could be full-time work, W-2 work. So it does not matter in terms of how many jobs you change, but if it's always an increase in income, that is an acceptable scenario for us. Now, job is very important with this COVID-19 pandemic, in that there's certain restrictions on if you are out of work due to COVID. Guidelines now have changed since last year with respect to how we have to treat that. It'll take me a while to go through that, but be aware that I can get you through those hurdles and hoops if you call me, and this way you can tell me what your situation is, and we can develop a profile for you that will work. And so when you're talking about buying a home, you got to talk about it. You got to talk about monthly payment. What is that going to be? We have a thing called debt to income. If you have 3 or 4 cars and you have a boat or credit cards, your debt is high compared possibly to your income. That's a calculation we make right up front to tell you how much of a home you can buy. So be aware, we're going to help you through this process. And all you have to do is call me. I've been doing this for 26 years. And just call me, and I'll be glad to help you. It does not cost you a dime. My telephone number is 216-346-6856. Charles Bond, otherwise known in some circles as 007.
All right. So,
give him the number one more time, Brother Bond.
Yeah. 216-346-6856.
Okay. That's Charles Bond right here on 360 Info Network. He just gave you the telephone number. Feel free to reach out to him and get that vital information. We're at 1146 right here on AM 1490 WERE. You're listening to 360 Info Network. When we come back, we will be joined by Jennifer Valentine with more information that you can use regarding real estate. We'll be back with more 360 Info Network right after this. We're back. 360 Info Network here on AM 1490 WERE. I'm Vince Robinson along with Hamtonio and our special guest at the moment, Jennifer Valentine. Lynn?
Yeah, Jennifer is with N.O.A.H, Northern Ohio Affordable Housing, and she's going to give us some good information and some tips. If you're looking to buy that house, what programs or what are the benefits that you can maybe achieve or get in order to assist you in purchasing the house? Jennifer, how are you doing?
I'm doing excellent, and good morning, gentlemen, and good morning, Greater Cleveland. It is always a pleasure to speak to the people of Cleveland and let them know that Ohio is number one on the map. There are so many benefits on buying a home in Cleveland, and a lot of you will notice that you're seeing more and more people moving here from California, from New York, just all over. And we have a lot of advantages, not just because of our location, but because of the wonderful incentives that the state of Ohio and the local governments have for people who want to buy their first home. For example, does everyone know that the state of Ohio has a program called OFA? And in that program, you can get up to $5,000 in down payment assistance. And if you are a graduate of a college, and it doesn't have to be a 4-year college, it could be a 2-year college, we have a special program called Grants for Grads. And that program automatically allows you to gain access to $5,000 to help you get your first home and start building equity and stop renting but start owning. In addition to that, we have a beautiful program that's being offered by cities. One in particular, where I am, is in the city of Cleveland Heights. If you are being labored by student loans, if you move into the city of Cleveland Heights and you actually have a student loan and you stay there for 10 years, they're actively working towards helping you get rid of that entire loan in its entirety. So that is an amazing, really amazing incentive to move in Cleveland Heights. Also, the city of Newburgh Heights is offering very much the same. So if student loans have been a thorn in your side, you have actual communities that are paying you, will pay off your student loans as long as you become an active and resident in their communities, which that amount is just phenomenal.
Well, Jennifer, you're about to change the complexion of Newburgh Heights with that announcement.
I mean, because that's been a burden forever for people dealing with those student loans. You know what I mean?
Yes.
It's really. I mean, we see what our government is going to do as well in reference to those student loans, but I think that'll give folks a little bit more leverage in purchasing. You know, what are some of the pitfalls and some of the prerequisites they could do and get themselves lined up? Because credit, interest, those type of things. What areas is hot right now, or how they can get some built-in equity and things like that.
Right, and gentlemen, you hit the hammer on the nail. The current climate in banking has changed drastically, and this is what I want our listening audience to know. When we present our documents to the bank, it is imperative that and when we teach our classes, we always encourage people to have 3 accounts. One account is actually their income account. Number 2 is their operational account where you pay all your bills. And number 3 is your savings account. They don't want to see all of the cash apps, going to the store 14 times, Walmart, buying chicken, nails, hair. It looks as though we are dysfunctional. So what I'm encouraging everyone listening to me, when you go to a bank, have your statements look uniform. You should have a statement that shows where your direct deposit is coming in. That means that your money is the source. Your money has to be seasoned and sourced. They have all of these active policies now against money laundering. You just cannot pop up with $10,000 or $15,000 and not have had a trail as to how you accumulated that wealth. So when a person goes to buy a house, if they want to get that house, they need to have a statement showing where their money has been put in without all the cash apps and all those are distractions for the underwriter, and ultimately will possibly end up being a denial because they're looking at your financial maturity. So you need to segregate your income coming in, and you need to segregate a depositing savings account where every week or every month you're depositing your money in. So now your money is seasoned and sourced. So even if you do $50 or $100 per pay, that looks excellent. And in that savings account, they don't want to see you put $5,000 in and then take $4,000 out. That shows inconsistency. We cannot afford to be good. We have to be better.
I know you had a tip. I just know you had a tip about the stimulus money as well.
Yeah. Okay. The stimulus money is a great source of funds. So if you get your stimulus check, you put it in your savings account. If you're planning on buying a house, that looks good because that's a source of legitimate income. Your paycheck is a source of legitimate income. And also for those of you who are fortunate enough to have a relative that has assets, you can get a gift letter. As Mr. Botton indicated, there's a variety of ways to get the money, but what I'm trying to guard people against is giving banks dysfunctional paycheck stubs with all of their business on it, and it makes them look dysfunctional.
Okay, Jennifer, you got about a minute left. Talk about your organization really quickly and talk about how folks can get in touch with you.
If there's anyone in the listening audience that has a credit challenge, we have a challenge for them. At N.O.A.H, we can build your credit 60 points in 60 days. Okay? That's one of the programs we do. The second one we do is financial maturity. And that's a whole, that shows you how you enter into a bank, knowing the language. If you went to Italy right now, if you went to Africa, you need to know the language. The bank has a different language than what we have in our community, and we need to know their language so that we can get our loans.
Okay. N.O.A.H stands for what, and how can they reach you?
Northern Ohio Affordable Housing, and the number is 216-N-O-A-H, 216-N-O-A-H, which stands for N.O.A.H, 6624, 216-932-6624.
One more time with the number.
216-932-6624.
Okay. We're going to offer this radio program as a rebroadcast on my YouTube channel, so don't fret if you didn't get all of those numbers. We're going to identify everybody, give you their numbers, and you'll be able to reach out to them. We want to thank you for being our guest on 360 Info Network. Any parting words that you would like to provide for Jennifer, Lynn?
Well, just Jennifer has been in the industry for a long time, so and a wealth of information. So reach out to her and get in touch, and she'd be glad to sit down with you and educate you on some things. So appreciate you, Jennifer.
All right.
Thank you so much, gentlemen. Really appreciate you.
All right.
All right.
So, Brother Lynn, we've had 4 quite impactful guests on our show, and we certainly hope that we can continue our relationship with these folks. Obviously, they offer a tremendous benefit to the listeners. You can learn things that will help you improve your financial landscape right now. Just the thought of eliminating all of that student loan debt, that's just phenomenal.
And see, and then again, liberation and dealing with our people is all, economics is closely related to liberation, you know what I'm saying? So we tend to be always ignorant to some of the things that may be out there to benefit us, and we're ignorant too, and it keeps us in that whole financial trap. So, our cultural and our spiritual liberation is tied into the economic impact that is impeding us right now. So it goes together and it's all important.
Okay. Just so that you know, next week we're going to be talking about cryptocurrency and other financial matters with Mbwebe Ishange. He'll be our special guest on 360 Info Network. He will also be on my show Open Door Live, which you can tune into today at 12:15 to hear an African love story. Akani Addison. She moved to Ghana after finding the love of her life, and we're going to talk about that as we look at Valentine's Day being tomorrow. We'd like to thank our engineer Tristan Sanchez. He had to direct a lot of traffic today, did an absolutely wonderful job. Thank you to him, and thank you to you for listening. This is 360 Info Network. Know yourself, love yourself, be yourself. Make it a great day, Cleveland. Peace.
Peace.